everybody. All right, got another one for today. After doing Netflix yesterday and the day before Micron Technology, today we're going to attack Amazon. Here is the chart for Amazon, the 10-year monthly candle chart. Do I have 10 years of data? Yes, I do. Let me first look at that. I probably had some alerts set in previously. Some lines. My software deletes those lines. I guess that misfortune, or what we would consider a problem of efficiency, actually forced me to always redraw my lines, and I've noticed that sometimes I don't exactly draw them the way I did originally. That's when you know that this is more of an art than a science. We're not robots, and we always seem to have a skewed view of what reality is or what we want to see. So nothing wrong there. You see right here on the edge, I had in my black space, black margin. Helps me imagine what the price action could be or could not be. So it just helps me out. Right now we seem to have an ascending channel. If I draw this line real fast, yeah, it's pretty good ascending channel going up. There's multiple continuation patterns that occurred that were resolved to the upside. Another one here. Whoops, keep grabbing that. Here, and the measure moved the width, the height to bottom, added to the breakout line. Target reached. 1, 2, 3, 4, 5. Say 5 months continuation. 3 months move for that one. 1, 2, 3, 4. Yeah. Amazon has been steadily climbing with these nice continuation patterns, moving up the ladder of the ascending channel. All of this nice base it had for a few years right before it jump started here. Let's see what we have for. I'm just going to remove all these lines. Remove ultra lines. Right now, if I would to go in, there's no pattern which permits me to have an entry. I'm going to identify here some horizontal support. Horizontal support or resistance always has more value than a slanted, angled line. I trust those way more, and most of my A++ selections are based off classical chart patterns that have horizontal lines in them. I don't play many trades per year, maybe 3 to 5. I look a lot of charts, all of Forex, most probably 95 of available Forex pairs, stocks, equities, NASDAQ, New York Stock Exchange, ARCA, Toronto Stock Exchange. Futures, I monitor all of them, or most of them, but less liquid than Forex. Honestly, if I'm biased to an instrument, it would be Forex. If I could get an A++ chart on Forex, an A++ chart on for another equity, most likely I'll choose the Forex pair to trade. Just the precision, liquidity, it pleases my entries and exit. But and it's, yeah, that's how right now I view things. There's no top right now, so I don't know where. We're gonna have to wait till a formation, more candles are added, and see if there's going to be an eventual retrace, no matter where the price is, eventually back to the 950 level, or maybe a range, and eventually maybe a target, which would be the there you go, the width, the height, the bottom, add it to the top. I have no idea. I'm just going to put maybe just an alert here, a little above. And if it gets busted, I'll get an email, and I'll just go and look at the Amazon chart, see how it is. Just going to squeeze that a little bit. Yeah, I had alerts, no problem there. Sometimes I forget I put alerts because my software forgets to tell me it erases the trend lines. And I just reset them. No problem. It's computer zeros and bytes. There's no cost to having extra alerts. It brings you back. You don't have to be precise in them, just about or a little on the preventive side, and you just you get the alert and you come back to the chart. It's as simple as that. I think that's right now. That's what I see. Still an uptrend. Still an ascending channel. Maybe I could put those back. Still an ascending channel. Create parallel line. It's testing the upper boundary of the ascending channel. Is there some divergence with the RSI? High to high to high no, there hasn't been any divergence for those past year and a half. Maybe if I take eventually, no, we have there's no bearish divergence that I see with the price action, and we just have to wait and see. Add a few more candles and let the chart morph. I can show you if we go back to my Badcharts.com, click on the how-to. You could see here I have a blog entry trying to represent or demonstrate how I view what chart morphing is for me. You probably seen the same phenomenon, but have another name for it. Here we have a bottom formation, which should give you a nice implied target. But what happens a few candles later? No, the price action reverts. You don't even get close to attaining that target that you've established. The price action goes back down, and you get triggered out. Plus, now you've noticed that the chart has morphed into a rising wedge, which is a reversal pattern. All patterns, you see, I didn't even notice back then, but the RSI of the price action goes up. RSI did not go up from peak to peak, so that's a sign of bearish divergence. It could have been a warning sign that this is not maybe an A++ stock or trading setup. Hindsight 2020, don't know. Live by your past mistakes or past and just keep going forward. The number one thing that always comes out is keep it simple. I've done trading. We always start. We discover first. You have a financial advisor. Then you start learning that you could trade yourself off the internet. Forums, penny stocks. After that, regular stocks, fundamentals. Usually people start. Then you say, there's technical analysis, and you move on. And technical analysis, it brings you to a crazy world, oscillators, indicators, Fibonacci lines, the whole shebang. Then eventually you move on to maybe trading futures. Then you start looking at the COT, speculators, trying to make sense with correlations, see if you could guess a price action. And then you end up just having like 20,000 indicators on your chart. You end up having a whole bunch of lines, overlays, pitchforks, Fibonacci lines, whatever. And it just messes everything up. The ultimate thing that I always come back to is keep it simple. And there's one thing that is always there is the buying and selling on that chart. You don't need more than that. It always comes down to that. And just regular classical charting will get you through the day, and try to keep it simple no matter what you decide as a technique, and always stay coherent. So if you went into a trade based on fundamentals, well, at least if you just your out positions, your target if you have one, and or your sell stop if you have one, that either establish it ahead of time and exit for the same fundamental reasons that you got in. Same thing for charting. If you go in on charting and you're using the implied measured move, your targets are established on the profit stop and or the sell stop. If you stay by that, that's why news is noise. It's influence. You shouldn't. You're sure you could discuss daily news for the fun of it, but just don't let yourself impacted by daily news, reports, what your friends say, whatever. The price action is you see in the chart and you based it off that, and just lock and load that trade with your bracket orders to get out your two stops, and move on to the next one. Continue analyzing charts, and don't settle for anything under A++. If it's under that, don't do it. Just move on until you find them, and that's the effort. That's the work, is scanning through charts, and being patient for the best setup possible. That's you'll avoid stress. You'll save a lot of time, and your NAV will be happier. All right, I spinned off a little bit off Amazon, but if I just show a recap of Amazon, there is nothing to play right now based on the monthly candle chart, and that's what I start with to make sure I'm on the correct side of the power of the trend of the larger candles. That's how I get A++. If I would deal on the weekly, I don't think I'd get as many A++ stocks, or even on the daily, I think I'd get a little less, just in case your pattern is within a bigger pattern which has a trend which could offset the one you're in. I'll show you an example eventually. On the daily, you could have had a bullish move. On the weekly, bearish, and on the yearly, bearish, and that would bring down your probabilities of reaching your possible target. With no further ado, I'll see you.